I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews with HM Rawat, co-founder and CEO of Lingo. HM, welcome to the show, and thank you for taking the time.
Thanks for having us, Ashton.
Very welcome. I've seen Lingo all over socials. I dive into it a little bit, but I'm excited to dive in with you today since you have been working on it with your team for a long time now, and this could be a big impact for Web3 and people outside of Web3 as well. So let's just start from the top for those who aren't familiar or haven't heard of Lingo yet. I would love to just get a recap of the vision and mission, what you and your team have been working on with Lingo, and then we can dive into all the details.
Yeah, sure thing. So we built Lingo with one mission. We want to create the world's most rewarding token. And the reason why is because if you look at 2021, that was the last bull market. There was over 1 billion people that were curious about investing in crypto. Over 1 billion people showed buying intent to get in, but only around 3% actually got in. And so we were like, why is like 97% of people interested but not taking the leap? What's stopping the everyday guy from joining that space, especially guys who are already curious about that space? And so we took a first principles approach, and we tried to figure out what are the core blockers of most people. And so it boiled down to 3 things. Number one is it's way too hard to understand. People feel like they need a PhD in white paper analytics to understand projects. Number 2 is that it's not it's too risky. It's backed by nothing. It's paper money, fake internet money. And the third problem was people struggle to understand the real utility behind tokens. And so our wild idea was simple. Let's build a token that's super easy to understand, that's backed by real value, and that has great utility in real life, and let's see what happens. And so this is what we did. We recruited the smartest guys we could find, and 2 years later, we built a token that is easy to understand. The way it works is you get Lingo, you receive points by holding Lingo, and then you can claim those points for real world stuff like vacations, shopping, experiences, and more. And the whole rewards ecosystem is fueled by real world assets that generate cash every month. So no matter the token price, you know that on the reward side, there's still great loyalty perks happening. And loyalty is something we really understand. My co-founder, he built the world's #1 premium loyalty company called John Paul. It's a company that was acquired by Accor Hotels for $150 million a few years ago. And this is Lingo in a nutshell.
Wow, that's incredible. And loyalty programs have been huge in Web 2, and I feel like all of that is going to be transitioning into Web 3, hopefully also backed by real world assets or backed by something. And I feel like these early adopter programs of, as you said, only 3% of people that were actually interested in crypto got in because of these barriers to entry. Building a system out that can lower those barriers to entry, lower the risk or lower the need to understand all the technical details will really benefit people that are early adopters. Maybe you can talk a little bit more about the Lingo rewards system and how your team's sort of developing it out with more of a long-term vision. You know, you don't want to be like one of those video games that comes out and then after a week or a month, everyone gets bored, stops using it. How can you create value for loyalty rewarders in the long term?
Well, there's 2 parts to this. One is the actual rewards ecosystem itself, and 2 is the value on the long term. And so if we start with the latter. If you listen to, I think it was a report by BCG saying that the tokenization of real world assets could possibly be a $16 trillion industry by 2030. And so this is a massive, massive deal. It's probably one of the biggest financial moves in modern history. And so for us, what was important was 2 things. Number 1 is how do we generate sustainable value for the community over long term? But number 2, how do we stay relevant to crypto culture? Because at the end of the day, right now it's a $1.34 trillion industry, built by a whole new, by a different breed of guys, a whole new community of people who believes in a great vision. And for us, it's important to be aligned with that culture. And that culture is sometimes a little bit degen, a little bit risky. It's exciting. We're going to change the world. And so how do we merge the stability and sustainability of real world assets but still be crypto relevant? And so what we've done was, in our model, there's a complete separation between the real world assets and the token element. The token element is the fuel behind Lingo's ecosystem. However, the real world assets, they help fuel the rewards ecosystem. And so what we mean by that is the token is still a token, it's still crypto, it can still do 1,000x or completely crash. However, on the reward side, we found a way to generate sustainable cash flow with real world assets to keep rewarding our community. And that's a massive deal, because if you look at 9 projects out of 10, the chart looks like this. They start pumping and then they end up dumping. And the primary reason why, according to us, is that, again, taking a first principle approach, analyze the top 200 coins on CoinMarketCap, they have one thing in common, and one thing only. They have a massive community rallied around their vision. And so why do these most of the charts crash in the future is they don't have a way to sustainably reward their community, because there's 2 ways they really do it. One is either they airdrop their own token, so they dump their own token, which is great in the short term, but not ideal in the long term. Or secondly, they launch other NFTs or other tokens, but again, it's backed by nothing. On our side, we buy assets. Right now, we're buying primarily real estate assets that generate cash flow every single month. And then we use this cash flow to inject 100% of what we generate to fuel the rewards ecosystem, which means that the dollar value of your rewards stay the same, no matter the token pumping or dumping. So that's one thing. The second element is the rewards in itself. And for that, the power of community is massive. So the idea is the fact that we have a sustainable way to generate value in terms of rewards, what that turns out to be can be anything. It can be anything from holidays to shopping to mobile phones to concert tickets, etc., etc. Right now, we are starting with holidays and hotels, because this is where we are quite strong at. A lot of our investors are hotel owners themselves. Right now, we have around 103 investors who manage over $3 billion. A lot of them are hotel owners. We also have the ex-managing director of Booking.com, who's on our advisory board. So that's a low-hanging fruit for us. But ultimately, the idea is our community will vote on what we offer in terms of rewards.
I love that. That's great to hear. And I completely agree about the sustainability of the rewards. And I think one of the reasons that 97% you mentioned of people that didn't get into crypto, because the volatility or the uncertainty on where it's going to go. And looking at a loyalty rewards plan, you don't want to be getting rewards and then, you realize that something crashed and the rewards are only worth 5% of what they were. I recall at one point, Starbucks changed the value of their rewards. It had almost dropped it by 50%. People were very, very mad. And you should really have a system that it's going to be worth the same or even better in the future. It's going to be worth more as it appreciates, whether through that's some token economics or the appreciation of the real world assets or some kind of sustainability of the community.
Well, that's the core of how we engineered our model, because most token ecosystems are engineered in a downward trend. Like it's normally a vicious cycle, because it requires new user influx, which means that if you're buying at a price, the only way you get a profit is someone else buys at a higher price. So eventually the dance stops and you end up losing funds. But this is the case for most models in crypto today. We've engineered it in a different way. Now, the way it works is every time people trade our token, the transaction fees that we generate on the on-chain smart contracts is invested in real world assets. Now, these assets generate cash flow, as we discussed. The fact that we use 100% of the net cash flow to re-inject into our tokens ecosystem consistently means that we have a way to fuel a rewards ecosystem consistently. What happens when you give people free stuff, vacations, shopping, blah, 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 is it attracts, in theory, it attracts a community organically. What happens when your community grows organically is it stimulates your trading volume. And now when your trading volume is stimulated, guess what? We acquire even more assets. And when we have more assets, we have more cash flow. When we have more cash flow, our rewards ecosystem is even more powerful, which helps us attract an even bigger community organically, which allows us to buy even more real world assets, and up and up and up. That's the way we've engineered it, and we haven't seen any other model like this yet.
That's really good to know. And in these traditional loyalty systems, I'm used to spending a lot on shopping or, travel, booking hotels, flights, things like that, getting the rewards I can use for future flights. It's great to hear that you have these major partnerships with vacations. Who doesn't love going on vacation, especially for free? And now you're saying here about the trading volume sort of increases Lingo's ability to purchase more real world assets to back the system. Could you give an example of, say I'm not really in crypto that much, but I want to start having using a loyalty reward system like Lingo that works very well. Would it be similar to a traditional system where I can go in, start paying for shopping or vacations, or is it just through the crypto volume that I could sort of start generating the rewards?
Well, the crypto volume helps a more powerful rewards ecosystem in the long run. It doesn't generate the rewards in itself. What generates the rewards is the real world assets that we acquire and own and manage, and we decide to just take 100% of what we generate to inject back into the rewards ecosystem. So as a holder, just by the fact that you own Lingo, nearly guarantees that you will get rewarded for your loyalty. And when you compare our model and the traditional loyalty system, there's three things that we do differently, and it's not because we are extremely smart. It's because this technology in itself gives us a great unfair advantage. Number one is the fact that we can give way more value compared to traditional systems. If you look at American Express miles or hotel points, normally it's between 0.5 and 3% of what they generate that gets reinvested in the loyalty. And it's normal because they are shareholder driven companies. They need to maximize profits for shareholders. Crypto is about community. So instead of 0.5 to 3%, we use 100% of the net profits we generate and put everything back to the system. So it gives you a crazy unfair advantage because the model in itself works because we are community driven and not and we don't play by the same rules as Web2. The second difference is that once you receive miles from your preferred loyalty partner, once you claim your miles, you're done. The only way to get more miles is to spend more. With us, as long as you hold, even if you hold Lingo once, you keep receiving miles or points or rewards loyalty as long as you stay in the community. You don't need to spend more. And the third advantage is that it's liquid. Tomorrow, if you want to resell your points, you can't do it for most projects. And the fact that it's on chain with us, you will be able to.
That's incredible to hear, and I love that. And yeah, it's there's so many issues in traditional loyalty. Whether you lose your points from them being expired or they're worth less, you're always getting the short end of the stick. And I think it's just because of that traditional shareholder model, they're trying to maximize for their shareholders, and it sort of ends up hurting the loyalty people, and it hurts their community overall. And like this shift to a more decentralized governance and being able to reinvest 100% into the community, into the project, is like unheard of before, which is incredible. So I'm really looking forward to seeing how all of this plays out.
Yeah, well, it's a mindset, It's on the one hand with the traditional systems, it's okay, how can we give the minimum possible to the community so that they stay loyal more than the competition and we make the most cash? Where we're like, fuck that, let's give the maximum and see what happens. Yeah. And it's just a different game.
Definitely. And I'm curious on the real world assets. I've been in discussions with many people who are foreseeing the size of the market value of what real world assets will become when they're tokenized. We've really not even hit like 0.1% yet. Eventually, most assets in the world will become tokenized. But of course, real estate is a major player for that. And I've had some great discussions recently on how more people are being open to tokenizing real estate. Can you talk about the decision for Lingo in where to start investing in real world assets for the start, and sustainability or good returns, and where you're sort of focusing as you grow out the asset portfolio?
We have three criteria for our asset acquisition. Number one is it needs to be in a tier one jurisdiction. For example, Paris, Dubai, Miami, etc. And the reason why is because the token element is risky in itself, because de facto in that space, 90% plus, if not more, of people, they buy into tokens because they want to make, they are speculators essentially. They want to make 5, 10, 20, whatever X on their funds, knowing that if you can make 100X, you can also go to zero. So this is the nature of that space in itself. So that aspect is risky in itself. On the real world asset side, this is really not the place where we want to be risky and aggressive. So tier one jurisdictions in general are as safe as you get in terms of market fluctuations. The second criteria we have is the net yield on long-term rentals. So we optimize for apartments and holiday lets and hotels. Our goal is to do at least a 6% net yield, which is also not easy to do in tier one jurisdictions. But with our network and investors, we are able to find these kinds of deals right now. And thirdly is ideally it needs to be optimized for short-term rentals, where you could aim for a higher 7 to 10 net yield, but also add extra utility for the community going forward.
Amazing. Well, thank you for explaining that, HM. And I'm curious on how people can get involved, or exactly at what stage are people able to start earning the rewards, getting involved, and figuring out how to maximize their participation in the community and in the system.
Right on. There's three phases in which people can get involved. Number one is on the private round, which it might be closed now, but if guys can add value in some way, in the sense that guys who have an impact in the Web3 space or in the Web2 space or in the reward space or real world asset side, if there's an appetite to add value, we generally open for guys to get in our private round. Well, it is quite expensive. The minimum ticket to get in is 25K, but for us, it was important on the private round side to surround ourselves with small investors who can add value. The second way will be our community pre-sale, which we will announce very soon. So stay tuned on our Twitter and Discord. And the third will be when we list the token. And once the token is listed on our DApp and our rewards, so you'll be able to stake your Lingo tokens and accumulate those loyalty points to claim rewards.
Very cool, HM. And I can leave the Twitter and the platform links and the other social links in the show notes below as well. Is there anything else that you want to mention before we go? I would love to follow up with you in the near future as well, but just for this conversation, is there any last words?
We're very excited. This is we've been building for the last 2.5 years. So imagine, worst bear market in crypto history. Our vision was simple. Let's test it out. Let's do something that's easy to understand with real value and real utility and see what happens. And we were surprisingly, extremely surprised when we started our private round in November 2022, the peak of the bear market, and we sold around nearly $6 million of Lingo tokens with nearly no marketing, which showed that there is a massive need of something easy to understand with real value and real utility in that space, and no one's doing it. And so for us, it's the ultimate proof that there is a need to solve these problems in the space. And this year is super exciting. We just crossed 51K today after so many years. Bitcoin, I'm talking about Bitcoin. ETFs got approved. Halving is in a month. We'll have the US elections, and we're launching this year. So we're super excited, and with people who believe in our vision, you can join our Discord, speak to anyone from our community members, and hopefully you hop on board the Lingo train.
All very exciting things. Thank you so much for your time, HM. All the best with Lingo moving forward, and let's definitely follow up in the near future.
Appreciate your time, Ashton.